Joining me is Chairman CBIC, Mr. Sanjay Kumar Agarwal. So thank you very much for speaking with us on Business Today, India Today Group. Congratulations. It was 2017 when the regime was introduced to the country, and 2025 where we are seeing a 2.0 version of it, which is way more simplified, easier and beneficial for a common consumer. On the 48,000 revenue implication that this will cost to both center and states, how confident are you that that could be subsumed or taken over very well by the consumption?
This figure which you have quoted just now of 48,000 crores is the revenue implication. Basically, it is based on 23-24 consumption figures. It's a figure arrived at by mathematical calculations. But actually, our experience is that whenever we make a rate cut, that leads to higher consumptions, boost in demand, boost in economy, and increase in GDP. So overall, the impact is not as per the mathematical calculations. The impact is much less whenever rate cut happens. And ultimately, our experience is that many times there is no hit on revenue. So because this exercise is very complex, and what happens that in the entire value change, that if the rate changes at different stages, then it is very difficult to predict how much will be the revenue implication. So another thing is that whenever rate cuts happen, the compliances goes up. So this is our universal experience. Say for example, like on health services, or rather fitness services, the rate has been cut from 18% to 5%. So presently, we have seen, all of us have experienced that there is reluctance on part of the facility availer to make the GST payment. So when the rate is low, say at 5%, then this tendency will not be there. So the gym operator, he will also raise an invoice. The person will also not mind in making the GST payment. So that's the reason I am saying that the compliance level goes up whenever there is a GST rate cut.
How will you ensure that the benefit is actually passed on to the end consumer and it does not linger around or lag within the middleman, or industry absorbs the extra benefit?
I would say that Indian economy is very mature and there is a lot of competition in the industry. So it is not possible for the industry not to pass on the benefits. So earlier also in GST law there was provisions on anti-profiteering. Our experience is then when GST was introduced and first 3-4 years when actually this rate reduction exercises happened, but there were not too many applications which were filed with anti-profiteering authority. In fact, the implication was also not much. That is indicative that largely, the benefits, rate cuts benefits were passed on in the year 17, 18, and 19. So we expect that this time, after this exercise also, industry will pass on the benefits to the ultimate consumers, and which is the objective of this exercise also.
So do you think that your indirect tax target could actually be beyond what you are estimating on the fact that the consumption could pull up extremely?
Yeah, consumptions will definitely go up and that will boost the demand. But it is too early to make an estimate what will be the revenue collection in this FY26. But we are confident that the collections will be good and the rate cuts will not impact the revenue largely because of the boost in demand, increase in consumption, and increase to the economic activity in the country, and overall increase in the GDP.
Great. So one last question. A couple of states post the group of ministers meeting had shared that one of their recommendations was also to introduce an additional levy on sin or demerit goods. Is there a scope of something coming beyond 40% special rate?
I would say that in GST Council, what can be discussed is within the realm of GST. Under the GST law, the maximum rate applicable is 40%, and which that rate has been recommended by GST Council on sin goods, demerit goods. So up to that, we can go under the law of GST. What extra can be levied on that, that is a separate matter, which cannot be discussed within the GST Council.
Thank you very much for speaking with us, sir, and wishing you and the team luck for the September 22nd rollout.
Yeah. So we are confident, and in fact, we are ready from our side. And Some updations are required on the industry ERP system so that the new rates are reflected. And I feel that everything will roll out very smoothly, glitch-free.
Thank you, sir.
If you like the video, do like, comment, share and subscribe.